So next up, pleased to introduce Morrie Goodz. He's the Managing Director at MacPhersons Resources Limited. Morrie's a mining geologist and a fellow of the Australasian Institute of Mining and Metallurgy. He has a degree in chemistry and geology and has an MBA and is a certified mine manager. He has 34 years industry experience, including 9 years in international mineral exploration in North America and Africa. Since 1985, he has been based in Australasian operational strategic management roles, including operations manager, technical director, chief geologist, and registered manager at the A1, Morningstar, Daisy Milano, and the Kalgoorlie Consolidated Gold Mines. In 2009, Morrie became the managing director of MacPhersons and has been involved in the acquisition and development of the Nimbus, Barara, and Coolgardie projects. Would you please welcome Morrie Goodz?
Thank you, everyone. I'd like to express MacPhersons' thanks to Diggers and Dealers for inviting us to present this year, and for all of you, as Colin said, that staying for the graveyard shift. It's always a big challenge at the end of the conference. I won't show you any ultra 3D motion, so any of you that are still queasy after that fantastic video, you're safe. The standard cautionary statement, I'm sure you can read that on all the websites. What we wanted to bring forward today is we're probably at the opposite end of the spectrum from the previous presentation. MacPhersons Resources is starting. It's a young company. We've only been around for 18 months, but we think we have delivered to our shareholders and to the local community of Kalgoorlie quite a substantial benefit in 12 months. And summarize that, what we have accomplished in the last 12 months is acquiring some fantastic assets here in the Eastern Goldfields, in particular a number of silver, zinc, and gold deposits and mines that have had a long history of production and a recent history of discovery and production. We also, in the last year, have acquired a processing plant which can process both silver and gold ores, and we've gone through the process of commencing that refurbishment. We started the last year without any silver resources, and we've taken that to 12.5 million ounces over the year in a silver equivalent. We've taken our gold resource base, which we started the company with at 100,000 ounces, and we've moved that up to 300,000 ounces, and we've created a zinc resource base from nothing to 35,000 tons. And in essence, what we've done is added value to our shareholders, to the company, of about $655 million in value after discounting for recoveries and all other process requirements. So we've taken into consideration what's in the ground, and then we've taken and said, well, we can take $650 million worth out of that. We have been one of the few companies, and we're very proud of it, to deliver shareholder value. So if you invested in us 12 months ago, you've gained 44% in the value of your stock holding. And we certainly have a plan to keep that growing further this year. We've managed in our tenement assets to acquire a number of very highly prospective copper and nickel opportunities, and I'll run through that with you as well. And our asset portfolio, our tenements, we've grown our package by 800%, all in quality areas in and around Kalgoorlie. Our furthest tenements are 35 kilometers from Kalgoorlie, and just as we heard previously, if you want to look for elephants, you look in elephant country. So I think we've given our shareholders and our future shareholders the opportunity for growth. And we'll talk today a little bit about our road to production. We anticipate being in production in 2013. We're well on that way. We've had a successful year, and we believe next year will be more successful. Just quickly, for those of you who are not familiar with Kalgoorlie, our assets are based around this local center. We formed the company on our Coolgardie gold assets, 30 kilometers out to the southwest. And in the last year, we've acquired the Nimbus and Barara zone, which is quite a substantial gold field just to the east of Kalgoorlie. 10 kilometers from the famous super pit. Here's a close-up look of our Nimbus assets, and we've had a major focus there because of the acquisition of the mill to get that mill ready for silver and gold production and to deliver a resource that can justify the size of the mill, and as we will discuss later, to support the expansion of the mill that we're now just about to turn the key to buy a new mill at three times the size of the existing mill. Just want to point out on that slide, you can see just to the south of us, we have a significant gold producing mine, which is the Golden Ridge mine, was mined down to 500 meters and produced or has a resource endowment of approximately 1 million ounce. And you've got the Kanowna Belle, the Kanowna Zone, which has an endowment of approximately 10 million ounces. And we hold approximately 20 kilometers strike length between those two mines. We have on our boundary to the east, to the west, I should say, Barrick and Newmont in the KCGM Super Pit joint venture. We've got Barrick and the Independence Group on our northern boundaries. We have Alacer on our southern boundary. And as of Monday this week, we have the new Silver Lake on our western boundary approaching closely. And I think for our shareholders looking at the future, I think we've got the pie in the middle, and there's going to be some exciting times ahead. Company formed just over 18 months ago, and we've gradually grown the company from there. We have a very strong support through the directors and the management team, who hold approximately 37% of the company. We have some key private investors who hold about 30%. So we believe we have a strong representation of about 70% of the company. Currently trading at 39 cents. It's an 85 mil market cap. So we're at the small end of the scale of where we see ourselves growing in the very near future. We have 100% of all our assets and our projects. So we are in control of our future, and we also know that our shareholders will receive 100% of the value of what we do. And as you can see from that chart, we have outperformed certainly the market sector that we're in, and we believe we'll continue to do so. One of the big things that makes a company work well is a good team, good management, good experience, and a good sense of well-being that we work together. There's some, as we saw in the mathematics yesterday, 1 + 1 can equal 3, and we believe that putting the team together that we have, we can deliver that. Chairman Ashok Parekh, who's known to many of you locally here in Kalgoorlie, is a chartered accountant, well-versed in the business of putting together companies and businesses successfully. And he's certainly been instrumental in getting MacPhersons together. We have Jeff Williams, who's a mining engineer, a Broken Hill boy, worked 16 years in the zinc, lead, silver mines there, and has quite a bit of experience in the brokerage industry. And then in the last 16 years has managed mineral deposits and took that from IPO to $1 billion enterprise. Recently retired from that and has been a director of MacPhersons since its inception. Ron Ellis, our operations manager, many of you local people would know, he's just come over to us after managing GBF Underground, substantial underground experience and operational background, and Ron's also managed in a senior operations role, Broken Hill Mines, so another person with good silver and zinc and base metals experience. Myself, I started in geology, moved into mining, been involved in operations management. My background, I started with Agnico Eagle Mines in Canada, back when they only mined silver. So I've actually worked in 6 silver mines in Canada over there and have base metal experience as well. So when we look at the core executive of the team, what we're delivering to you is a team that has many years being involved in companies, being in production, going into production, being involved in discovery, and a lot of good goldfields experience. And most importantly, we have experience across the range of commodities that we're working in, so silver, base metals, and gold. The rest of the team, we've got a lot of good experience there. Adrian Hall, also another local person who is a metallurgist who's brought on board a number of different mills and recommissioned mills, and at the moment he's in charge of getting the Nimbus mill back on track and looking at our expansion. So he's managing that process. And we've got a lot of other people involved that are residential, and that's an important part of what we do, is being involved in the community here in Kalgoorlie, and all our people are residential. Nimbus, this is the main focus of where we are at the moment. Those two pits you see there were operated from 2003 to 2007, and they produced at an average grade of 350 grams per ton. They produced 3.6 million ounces. And back in 2007, when they stopped, their cash cost was $6, but their revenue side, they only reached a maximum price of $9 per ounce for silver. And certainly in the current market, where you're looking at the current year, the price range of $27 to $37, there is significant upside in the silver market. One of the reasons that we've focused our attention at Nimbus is also because it's a zinc deposit. And all the market pundits are predicting that zinc will be a substantial resource commodity in 2014, 2015. And for us to get into production at that point in time, we have to start Nimbus production in 2013. So we're on schedule. It's part of our focus to deliver silver and zinc at the peak of the market. And we shouldn't forget the deposits, the lenses also hold gold. And I'll discuss a little bit about some of our new findings in the gold shortly. This is where we started our drilling at Nimbus. Now, I've titled this slide, this is an exciting slide from our geological perspective. We have a video on our website. You can go there. Unfortunately, you can't go to our booth. It's currently being set out for the dinner tonight. But if you have a look at the video, you'll see the deposits in 3D, and you'll be able to get a sense of what we've got there. Those lenses that you see there, numbered 1, 2, 3, that's the progression of how we drilled them and discovered them. And as we announced this year, when we drilled 1 and 2 is when we actually validated our geological model and proved up a major silver resource. When we drilled lens 3, that was essentially a discovery of a deeper lens, which we've now extended and we're continuing to drill. And today we'd like to announce, and certainly with the resource evaluation that we've been doing in the last few days, that we have defined what we would call lens 4 and potentially an extension to lens 4, which is a high-grade gold zone. So officially we had a release at 2 o'clock today, and you're the first people to hear about it. That we've hit a high-grade gold zone as an extension to lens 4, and it poses a very good idea as to some of the debate we have as to whether we are a pure VHMS deposit or whether in fact we have a high sulfidation epithermal. And what that means to you is that these deposits, Eskay Creek is often the comparison to Nimbus. You can have bonanza grades, and when I say bonanza grades, deposits or lenses going anywhere from a couple hundred to 700 grams per ton gold. So I'm talking gold now on top of the silver. So these can be fantastically rich deposits. Up until this week, we've just received confirmation on this 54-gram zone. Up until this week, our highest assays through the sulfide zones have been 14 grams per ton. So this is a significant step change in our grades. Just to give you an idea of where this is positioned, that is the discovery pit. The new lens 4, as we defined it in the current block model, out about 20 to 60 meters to the side of the pit. And the intersection that we've just received confirmation of is 80 meters from the pit wall. And this plays into our geological and our mine planning model for looking at the silver super pit. We believe that we will have a pit which will extend to over 1 kilometer long, and it will be the largest silver pit that we have here. And so it's well worth its name as the silver super pit. Just to give you an idea where 4 is, in this cross-section, 4 is about 100 meters forward of the section, but it's in line with a zone that we've continued to intersect, what we call a zinc gold zone, and we continue to have an enrichment of gold all through this zone. The background grade, just to give you an idea, in these massive sulfides can get up to 1 to 2 grams per ton of gold in there, so it is a significant byproduct. We have another section here. Now, if you go to our website or look at our announcement that was released today and the announcement on Monday, you'll actually see that these intersections are in the grade of thousands of grams per ton silver. Some of them in the up to 10 grams per ton gold as a byproduct, and we have a number of zones that range from 10 meters thick to now 100 meters thick that are going in excess of 100 grams per ton silver and in excess of 20% zinc. So quite rich deposits. There's an idea of some of our ore. This particular intersection was 7 meters thick that went 1,600 grams silver and 31% zinc and 7% lead. That just gives you an idea. Some of the grades you see up there, 3,000 silver and 40% zinc. That's very massive sphalerite. Great thing about this, you see the reddish mineral in that photograph. It's a very coarse sphalerite. The initial metallurgical test work, we see that we can put a flotation plant in front of our existing Merrill-Crowe circuit. That will recover a coarse zinc concentrate. The initial met work is suggesting it could be anywhere from 50 to 60% zinc. That will in fact make it one of the highest quality zinc concentrates that we can produce, and that would be very attractive to any of the market players. There's a view of our mill. What I'd like to highlight on here is that this is our resource update that we published on Monday. Now, the important thing about this resource update is it's only effective of the drilling up to June the 3rd. So since June the 3rd, we've had up to 4 drill rigs on the site, and we have been drilling continuously, and we continue to do so. And we have continued to intersect a number of zones, which, as per that announcement, we are getting results every day, including this new gold zone. We have another thing that we have done in this resource, if you have been following the story, is in the last 3 months, we have moved 46% of our resources into the measured and indicated category from being in the inferred category, and we will continue to do so. So as far as the independents are concerned in reviewing the deposit and the spacing of our drilling, we can move all our resources into a higher category once we complete our density test work. So in fact, the continuity of the mineralization and the continuity of the grade is well enough established that we're going to see a great categorization lift in the very near future. Just an example, these are some of the measured resources. The tailings dam that you see in the foreground, it has to be quite dry and compact. We're going to dig that up with the loader. You can see the machinery on there. There's about 300,000 ounces just sitting in the floor of that pit. And in the background, what's really important is that deep red stain that's rising from the floor of the pit right to the surface. That's our oxide ore body. And at that moment, it outcrops. This deposit was discovered because it outcropped. It was only discovered in the 1990s. Yet another example of how in the eastern goldfields, where there's been such a high success rate of exploration, we continue to find new deposits. This oxide is continuing on the surface. That face had assays ranging from 40 to 70 grams per ton silver, and we currently have a drill rig sitting on the top of that to extend our oxide resources. We have, this is a cross-section through that pit and shows that tailings in the bottom section of that pit. There are a number of intersections there, as I said, between 10 and 60 meters thick, going more than 100 grams, some of them going 1,000 grams per ton silver. What we've also identified is a series of stacked sulfide lenses. And as you see there, lens number 3 was a discovery that we announced back in May, and we continue to establish extensions to these lenses. Where I've got 4 with the question mark on there, that is in the stratigraphic zone out to the west, similar to where it was on the discovery pit. There is a zinc gold zone there, and that may be related to our new high gold intersections. Just a quick view of our two pits, the Discovery and the East Pit. Those two pits are 300 meters apart, and those are the resources defined underneath them. You see that clear boundary between the indicated and the inferred. Just like the case of 3rd of June when we finished our work, that's where the density work was completed. So we imagine we're going to convert most of that to indicated very quickly. This here's a view of where we're moving in the future and where more resources come very quickly. The purple on there is the average of our classified blocks. Just to let you recall, those average blocks are containing a grade equivalent of 139 grams per ton silver. That is the average grade over all the blocks. The green blocks that you see there are the blocks that have not been classified but have already been drilled. They already have data in them. They already have a silver grade. I can tell you that all those blocks on there have a grade exceeding 25 grams per ton silver. Some of those blocks have grades exceeding hundreds of grams per ton silver. So it's all part of our process in the classification. A view of our Nimbus mill. This mill can process both silver and gold ore. It's a Merrill-Crowe mill. The front half of the plant is a classic crushing plant. The back end is a Merrill-Crowe. You can have a look on the website and you can see the fine detail in the flow sheet that's on there, as well as you can see the detail on our schedule plan on how we're moving to production and the key criteria it's going to take us to get into production next year. And we're on target to achieve that. What's also important in this plant layout is that this is an existing plant that we have been refurbishing. That's a 180,000 ton per annum plant. However, we are in the process, as I mentioned earlier, we've done the preliminary financial modeling, and we believe that everything is just about ready to give the go-ahead for a new 480,000 ton per annum plant that we're going to purchase out of the US, a new Merrill-Crowe plant. So what have we done so far on our road to production? We've acquired the plant. We did that about 10 months ago. 7 months ago, we completed the power line into the plant. We refurbished the ball mill that's there. And since then, what we've done is we've gone ahead and purchased the 1.6 million ton primary crush circuit, a second ball mill, and a leach circuit. That's all been bought and paid for, and that will be able to move into the construction phase next year. We're also looking at the upgrade of the silver plant. The new silver plant can be commissioned by September, October 2013, and that's when we look into going into the expanded production. And looking at 2014 for the flotation plant to get the zinc concentrate and all the other concentrates. We look at the sulfide lenses before. Just quickly moving forward, we'll just talk about our targets. In meeting that production date, we will get 500,000 tons per annum production in 2013, move that out to 1.5 million, and then 2.5 million by 2014 as we bring the flotation online. Just a quick view of how we're going to achieve that. Pit optimization study that we completed and released on Monday shows the expanded pits. And for those of you who have been following us for a little while, you will notice there's a new pit out there on the side of where the 4 is. That's basically the lens 4 extension that we managed to get the first part into our modeling, and 4 is where we've just hit this new gold zone. That's 80 meters out from the existing pit, and we believe that model for the silver super pit target is real and achievable. And as you can see, there's an awful lot of resources down below, and we're drilling. We've got drill rigs in there to justify moving out to one large pit. Quickly, you can check the slide on that website and on our announcement. There's the pit optimization. The important things here is this is just based on the first 3 years in the first pit that will achieve a turnaround of 113 mil on the NPV calculation, and that works out to a cost of $9 per ounce for the silver. Our exploration potential, there's an awful lot of color on that slide. Those are all the targets that we've already identified outcropping on the surface around those pits, and we're going not only through a program of drilling out the perimeters of the pits and between them, but in fact we have some major gold and silver anomalies in and around the mill site and we're right now reevaluating whether in fact we have to move the mill. If that's the worst thing we have to do, that's not so bad. Drill programs, they're all on our website. If you want to get an idea of what we're doing, we are doing a lot. And you can see one of those on there. We've completed the sterilization program so we can commence preparations to start building tailing storage facility number 3. Our silver resource target, we started, as I mentioned, last year, this time at 0. We developed a geological model for a target of 6 million ounces. We have now turned that into 12.5 million ounces. We've had a greater than 200% increase on our original target, and we continue to expand future targets. So we see that growth curve continuing along. Just some 3D modeling. You can look there at all the lenses. We've already identified 10 lenses at Nimbus. There's 6 of them on there. There's a lot more potential going forward. A really big topic of discussion right now is, are we VHMS or epithermal? And you can put 10 geologists in a room and you get 10 different models. But the one commonality in this is that in either case, we have multiple deposits here, multiple lenses. It's believed from the people that have looked at this that it could be 20 or more lenses, and we believe the potential here could exceed what a number of the market research analysts are saying. They're saying it could be 50 million ounces. We believe our target is greater than 100 million ounces. Just quickly, we have only looked at the one Nimbus deposit. We have 4 zones that are yet to be drilled. We have a number of areas that have drilled successfully, not yet classified. We have 9 other silver deposits, and I haven't even mentioned about the gold yet. Just quickly, I know I'm running close on time. Barara, 2 kilometers from the mill. We've already got a 100,000 ounce resource sitting there. 90% of the drill holes between Golden Ridge and Kanowna Belle are less than 70 meters deep. We've got a phenomenal number of intersections there, and I believe we could have another deposit between 1 and 10 million ounces mimicking those mines. We've already done the pit modeling on there. There's quite a bit of information about our gold deposits on the website. I'm just flipping through all the pit optimizations. There's a flyover so you can see all those deposits. In our announcement, the target plan to production, you can have a look at that. But I think most important, we look at this one slide that we started it. What have we achieved for our shareholders this year? We've added nearly $700 million worth in resource value after discounting for recovery. We've added 44% to our shares in value, and we believe that we will do this again for the next 12 months. So that's the best thing I think I can offer to all of you. Thank you.
Thanks, Morrie. Thanks, Morrie. Obviously an exciting story. We're running close to time, but probably have a little bit of time for a couple of questions if there are any from the audience, please.
Morrie, just in the interest of time, what are you doing with the mercury, especially in the tailings in the East Pit? And what kind of capex will you need to get into production?
Thank you for only 2 questions, Keith. The first question, the mercury, it's a common question. This is a polymetallic deposit, and I haven't spoken much about the copper, the lead, the mercury. There are a lot of other byproducts that are going to come out of this. In the case of the mercury, one of the reasons we're going to Merrill-Crowe, and in fact a new Merrill-Crowe plant, is they are specifically built for Nevada standards, and they recover all the mercury. It gets bottled into flasks. The mercury market is absolutely at the peak it's been in history, and it's a valued commodity. To give you an example, in the tailings alone, where we recover the 300,000 ounces of silver, we will recover enough mercury as a byproduct to pay for the entire new Merrill-Crowe plant. And the second question regarding the capex, we're looking at about $28 million to do the complete new mill build, and that includes also the infrastructure such as the new tailing storage facility and a number of other projects that we have on board already. The Merrill-Crowe plant's $2.6 million. That's 3 questions.
I think we'll leave it there. Morrie, thank you very much for your presentation.
Thanks.